higher than anyone had expected. And the market started melting down. Bonds prices were going all over the place. Stock prices down, Bitcoin down, people throwing a fit all over the place. All these billionaires going on social media complaining about how they lost some money and why Trump needed to change tack because they were losing money. Like I think it was Einhorn was whinging on Twitter or X for days on end. After about a week, dysfunction started to show up in the financial markets and, in our fugazi fiat financial world, and evidenced by declining bond market liquidity, which is really what the authorities care about in any country, because the government needs to fund itself. And so if the market in which the government funds itself, and we're talking about, the American empire, the US Treasury market, then they need to do something about it. And so the index that, I monitor and a lot of other people monitor is called the MOVE index. And it's an index that tracks bond market liquidity and volatility. And so when this index rises, you get more volatility. Why is volatility bad in the bond market? Because it basically functions well. And that was basically the bottom. So that was, 74,500 on Bitcoin. I don't know what the level in the S&P and the NASDAQ was. They were down like 20% over from that previous week and a half. And since then, it's been up only. Bitcoin's up, 35% since then. S&P, NASDAQ are green on the year. Since then, credit spreads have declined. Things have returned to normal. Liquidity is back. Volatility has declined. All these sorts of things. And the move is 110 or whatever it is now, right now. So that was the date. They pivoted. They provided a monetary stimulus in the form of, we're not going to try to divorce this global system that we said we were going to, at least in the same manner or pace that you thought we were, as of April 2nd. And everything, great, cool, back to status quo, let's go. And markets ripped. Sitting Jay Powell down and giving a press conference saying he's the man who's going to solve inflation for the American people. Now, remember, inflation is very, very bad. Whether you are a dictator or you're a democratically elected leader, inflation affects everyone. And so either you get voted out or you have a revolution if it continues. So everyone wants to make sure that inflation doesn't go crazy. And so the central bank was taxed, aka Powell, to fight inflation. So he's busy, stopping quantitative easing, starting quantitative tightening, which means he is reducing the size of the Fed's balance sheet. He's doing 0.75% interest rate raises every single meeting. He did that, I think, for 3 meetings in a row in 2022. Fastest rise in Fed funds rate since the late 70s, early 80s under Volcker. And, by the fall of 2022, the effects of tightening credit, both from a increase in the price of credit and a reduction in the quantity of credit, was taking its toll. Pay me zero, but these money market funds, because the rates are rising, because the Fed's raising rates, are paying me 2, 3, 4, 5%. So let me put it at the money market fund. The money market fund parks it at the Fed and earns a risk-free Fed funds rate, essentially. There's $2.5 trillion in here. But this $2.5 trillion is not being circulated in the economy. And so Yellen says, okay, I'm going to issue more treasury bills that are securities less than 1 year versus treasury bonds, so the long 10, 20, 30-year bonds. And because I'm going to have a yield higher than the reverse repo, maybe 5, 10 basis points, I'm going to pull that money out of the reverse repo program, because money market funds are yield seeking. They want to earn the maximum amount of money for their clients as possible. And a treasury bill versus a reverse repo are pretty much the same credit risk. It's still the U.S. government, essentially. So they're going to remove money from the reverse repo, put it into treasury bills that Yellen is selling. And that takes $2.5 trillion out of that facility and juices the financial market. So if you take a look at sort of from third quarter 2020, the Treasury Secretary, because they have all the power. When you issue $36 trillion or have a $36 trillion pile of debt, you're the one in charge, not the Fed.
Can we call him BBC?
The big Besson cock show. He's BBC.
I'm cool with it. I'm cool with calling him BBC. You came up with it, not me. So yeah. Okay, let's explain treasury buybacks. I could pull up a slide that you guys created at Maelstrom, because I really want everyone to understand how treasury buybacks work, because it's easy to get lost in a lot of the lingo here.
Yeah. So imagine you have this stuff on your books, and it's the old stuff, right? Nobody wants to give you money for the old stuff. You go to the bank and they go, I want the new thing. I'll lend you money for the new thing, but of the old thing, I don't know if I want to lend you money on that, right? So basically, as you run this this basis trade where you buy an on-the-run bond and you sell a treasury futures contract. Over time, the on-the-run bond becomes things that Wall Street likes to hear. But at the end of the day, he's a bond salesman for Donald Trump. And so forget all that shit about what he did before. It doesn't matter because his job is to sell bonds. And so he's going to tell you whatever he needs to tell you. He's going to prostitute his reputation as a sort of fiscal responsibility person to sell more bonds. That his job is not to make the government more efficient or any of the other stuff. His job is to sell bonds. And so if he needs to do treasury buybacks, he'll do treasury buybacks. If he needs to continue doing Yellen's policy of issuing more bills and bonds, he excoriated Yellen. He said, "Oh, you're a fucking idiot for not terming out the debt when the debt was so cheap." But guess what he's done in the last two quarterly refunding announcements? He's done the exact same thing as Yellen because he's in a box. He's got to sell bonds. The only way to sell bonds is sell bills because that's what people want, or do treasury buybacks. Remember, he's a bond salesman. He is not a hedge fund manager anymore. And I think people remember what he is. So whatever his personal view on the situation is, he's got to sit up. So number one, you have to apply the same rate to everyone. You can't have China at 100% and some countries at 10%, right? Because then what do, right? Okay, well, if I'm at 100%, that country's over here at 10. Well, I'll pay you a little bit of VIG, country at 10%. I'll ship all my shit through you. You rebrand it and sell it to America, right? You make a little bit of money on the top. I get to reduce my effective tariff rate and everybody's happy, right? U.S. consumer pays a little bit more. And then everybody gets to claim that tariff did something. There's a little bit more revenue at the Treasury Department in the US and tariffs worked. No, they didn't work. They didn't do shit, right? Because, not everyone is on the same side as the US. Then it's not, is it a China issue? But it's not always a China issue. The number 2 and 3 largest sort of trade countries are, Taiwan and Japan and Germany. And these are staunch, South Korea. These are staunch US allies who have hundreds of thousands of US military. That is a way to over time reduce the imbalances, because you can either attack the trade account through tariffs, or you can attack the capital account through capital controls or taxes on the foreign ownership of assets.
And dive into the fear around capital controls. Is that a real risk for us right now?
I think for the United States, it's the only way that they're going to be able to reduce these imbalances. What does that mean? And a modest, even a 1% tax on all portfolio assets invested in stocks, bonds, or property would yield hundreds of billions of dollars in revenue every year. And so at that point, then the foreigner who owns this stuff is like, okay, well, the yield at home is X, the yield in America is Y minus tax. Does it still make sense for me to invest these assets in America? Maybe I don't like to pay taxes. Okay, cool. Well, then I'm our market to float so that we can charge taxes and afford, this welfare state that we've created for ourselves.
Everyone likes to say $1 million Bitcoin, and for good reason.
I'm manifesting it. I just keep saying it. Maybe
just keep saying it. Yeah. Let's go. I don't think maybe it will happen. It will happen. But when, right? I want to, just because we're talking about $1 million Bitcoin, I want to get down to a more when level of like the next year. But just because we're talking about, when do you think $1 million Bitcoin could be realistic?
I think that we're going to have a crack up boom in sort of like 2026, 2027 time period. I think if we're going to have $1 million Bitcoin, that's when it's going to really manifest itself.
Okay. Let's talk about short term right now, the rest of this year. A lot of pundits, a lot of experts say,
delete Trump saying, no, we're not doing a deal unless it's very good for America, yada, yada, yada. The market's freaking out. Oh my God, they're not going to do a deal. And so we go back to sort of the April 2nd to, that week sort of volatility in the markets. And then we have the debt ceiling. So, assuming that there's no sort of bill passed to fund the government and the debt ceiling raised, that's essentially when the market is saying that the Treasury will run out of extraordinary measures to fund the government in the mid-August period. How do I come up with that date? You can look at the T-bill market and the term structure, the interest rate curve, and look at for kinks in the market because of how the rules are around money market funds and how they have to mark their books. The people Bitcoin's never going back above 110. That's it, right? So then it hits 110, then fucking on high volume eclipses that. That means it's game on, right? And then we run, and it's not based on any major new fundamental change. It's the same thing. Everyone believes they're going to print the money. And so then all the confirmatory biases start being, oh, the US government's going broke. Oh, they got downgraded. Oh, look at the deficit. Doge isn't working. Oh, this, oh, that. All these things that already happened that you could have bought Bitcoin at 74,000. Now it's, oh my God, that, the situation has just changed so dramatically. When there's no new information, it's just that the price changed. And so all those things that were positive in your mind get you to buy more Bitcoin at 110, 125, 150, right? And so we just run. And so to increase the credit into the system, you start juicing at least financial markets to start with. And that's why I think the fall is when they really need to start getting going, because they only have 12 months. The Republican legislators need to start campaigning on what did you do for me lately? Is what the voter is going to be asking. And so I think all this talk, all this doom and gloom, that's out the window. It's America's the best place in the world. Look at what we did in the first 100 days. I'm fucking amazing. We beat back China. They fucking bent the knee. We did the deals in the Middle East, all these sorts of things, right? Maybe there's a recession. Maybe there's not. I don't really care. It doesn't matter. I just know the money needs to be printed. The markets need to go up because the party in power is getting reelected in the same way that the Democrats did the same thing with, Fed cents, 40 cents, whatever it was, pretty much the lows that had been at post its token generation event. Thing has rallied almost 3x from those lows. ETH only went up 50%. Bitcoin only went up 30%. Why? Because they've got real cash flows. They're doing token buybacks with 5% of revenue. People are like, oh, okay, well, this is a real project. They've got this new card that they're coming out with. You can spend your staked ETH and other things. So I think those are the types of projects that are going to do really, really well in this altcoin season. And then if you're the next L1 with, a massive amount of token supply to give into VCs and no actual customers and no turns the price. And so I think the price of crypto trading is going to come down a lot in the United States. If Jamie Dimon is going to offer Bitcoin, then Goldman Sachs is, and Morgan Stanley and Bank of America and Wells Fargo and all of them, because they just copy each other now that it's okay to do so. And what are they going to compete on? Bitcoin spot trading, Bitcoin is not that hard. It's the same. The product is pretty simple. It's just price. And so, great for the US consumer. The price is going to come down. You're going to have a lot of choice on which exchange that you want to use. Now, I think that if you're talking about sort of the fun altcoin, shitcoin space, these institutions probably not going to be as forward leaning into that. And so maybe that's where there's going to be some opportunities for players to really differentiate themselves and create sort of a unique product offering. But, if you're talking like Bitcoin ETH, so we were in the UPXI deal, there was the David Bailey and the Nakamoto thing that did really, really well. And so if I'm a SPAC sponsor, I'm like, oh, okay, well, I've got the thing that the market wants is sort of crypto exposure or crypto light wrapped up in a nice tradable security. But where are the companies out there that I can actually acquire? And so, at Maelstrom, like, okay, well, we know how to do this. Let's go and find some cash flow positive companies that are probably not going to be in the exchange space. So it's a little bit easier to digest. We're going to raise some money, buy them out of the books, put in some proper management, dress them up real nice, and then we're going to flip them over to the SPAC guys and give them some companies to buy. And so that's something that we're working on pretty actively right now. We have a few companies that we're
like, subscribe, and turn on notifications. Support the channel by liking this video, subscribing, and enabling post notifications for more content on crypto and digital assets. Check out our other videos and share your thoughts in the comments below. Your engagement helps with the YouTube algorithm and keeps the content coming. Thanks for your support. Enjoy the video.